Hello, welcome back, ladies and gentlemen, to another interesting video about the bearish order block. And we discussed about the bullish order block, and I said I'll be doing them in parts so that you can be able to get the difference in quite a clear manner. If you've not subscribed to the YouTube channel, consider subscribing, and remember to give this video a thumbs up whenever you find it insightful, and don't forget to share and to comment. Now, just like we did for the bullish order block, the definition is the same, but we're now reversing everything for the bearish order block. Now, the bearish order block, it is the highest bullish candle now that has the most range between open to close, and it is near a resistance level. I'm repeating again, it is the highest bullish candle. In as much as yes, we're talking about the bearish order block, I know a lot of you are wondering why should it be a bullish candle yet we're talking about the bearish order block. Just a minute, you should be able to get the difference. It is the highest bullish candle that has the most range between open to close, and is near a resistance level. This is the resistance level. Now, the formation of a resistance level can be in form of multiple, at least whereby multiple rejections to the highest point, whereby the market is turning to the downside, or it can be formed by a swing point. It depends, Now, like the bullish order block, the bearish order block must have the most range. The most range in terms of the bodies. Disregard the wicks. At least the body must be bigger enough to qualify it for a very good bearish order block. Now, at least a lot of you are saying, oh, why have I brought the aspect of resistance for this particular bearish order block and the aspect of the support level for that bullish order block that we did? That is the real definition of the order block, and you can check on the ICT, the real ICT video by Michael Huddleston. Is the author of these order blocks. At least for a bearish order block, it must be suited or must be based near a resistance level, whereas a bullish order block must be based near a support level, depending on the context. Now, the range at least for the bearish order block must be at least bigger enough. But the range, we consider the body, and it must be near a resistance level. Now, we said we always have tendencies at least to trade, these order blocks, they're just institutional candles, whereby the pending orders, or whenever the market, the pending orders of the institution reside. So whenever the market gives us these types of order blocks, it is very, very easy for us to track the progress of the market makers, and at least we try to enter the marketplace with them. Now, at least in as much as, yes, the aspect of the order blocks that I talked about, or the aspect of the order block that I talked about in the bullish order block, same case applies to this bearish order block, the entry. At least I like the entry pattern that I talked about. So if you've not watched the video, the strong high, weak low, and the strong low, weak high, at least formation, I'm linking it to this video. So if you've not watched it, consider watching it. At least it will give you the insights, at least which order block is likely to hold, but more is coming away. So stay tuned, just subscribe and everything will be served. Now, this order block, at least I said, it is where the institutional orders reside. It's just an institutional candle. It is very, very easier to note it. But it all depends with the context and the framework of what the market is trying to tell you. Like for instance, this example of which I want to talk about it in a few, whenever we saw the market breaking these lows, what was this signaling? Bears are taking shape in the marketplace in as much as it gave us retracement. So where will we take ourselves from? From a bearish order block. And we are yet to see our bearish order block, the highest bullish candle that has the most range between open to close, and is near a resistance level. And I told you, at least the bearish order block now should at least sponsor a breaking structure. This is the breaking structure. At least you check from where the order block that caused the breaking structure was, this one. Right? But you'll be able to see the example at this particular level, and also the momentum in which price trades away from this bearish order block should be at least huge enough. The market should trade in a high momentum, just signaling that indeed the market makers are in play in the marketplace. So the bearish order block and the bullish order block, at least you should be very, very wise whenever you're trying to trade it. At least the market should show you a willingness either to trade to the upside. Now we'll be considering the bullish order block, the market to trade into it so that you can take our buys from. Same case for the bearish order block. Whenever the market has showed a willingness now to move to the downside, how? By breaking the swing lows or the short-term lows, signaling that indeed the market is poised to trade lower. So what is our focus? The bearish order block. Now, this is just the beginning. It's not all about the order blocks. There are specific candles that you must consider the marketplace, because the market can either fail to reverse from this order block. It can either try to fill an imbalance. These imbalances then give you reaction. It can either trade into a breaker block, the one that was necessary for liquidity to be taken out. It can either reverse from a propulsion block or either reclaimed block. So this is just the beginning. I'll talk about all these types of blocks in specific videos and of their own, so that you can be able to get the difference and to choose where the market is likely to reverse from. Now, for this particular example, you can see that indeed the market had showed us at least a certain resistance level, and the market showed us a willingness to move down by breaking these lows. And this pattern also, for those who had watched the video, I'm linking you to this one, it is a very, very nice pattern. You know, very, very nice pattern. Whenever this liquidity is taken out of this one and the market broke these lows, this is the swing or the strong high, then this one automatically will be the weak low. You can watch the video at a later time. It is within our channel. So the market is always targeting the weak lows whereby the liquidity is residing. So at least we've seen very, very clearly that the market is targeting the sell side of it. You know, now this is the resistance level, and the market has showed a willingness to trade lower. So we'll be focusing ourselves based on the bearish order block. Now, the resistance level should not be almost, you know, to the pip or to the exact level. At least that is why it is called a resistance level. It is not a resistance point, because when you say a resistance point, it is the exact level. It is the exact point. But when you say level, at least it is not precise. So that area, at least it is just a resistance area. Now the market is breaking lows significantly. So let us see what the market is doing using the replay button. Now, whenever the market is tested, you can take your trades from this particular point. This is the last bearish candle. But at least for the purpose, you can see it was to the peak. The market created another bearish order block. Why? It is near a resistance level. Whenever you've seen this low taken out, this short-term low, it has been taken out. So the market will be targeting sell. So we wait for the retracement to the bearish order block. Which one will be our bearish order block? And a lot of you are saying this one. No. In as much as this is the highest bullish candle, but at least this one is the highest and qualifies with these characteristics. It is the highest bullish order block and it has the most range. So you can mark from the open of it or from the low point of it, and refinements I'll be talking about at a later date. Then what do? You wait to enter sells on it. This is the sells. You wait for it to be tagged sells. Stop loss placement slightly above our bearish order block. You see, so most of the times we don't anticipate this bearish order block to be taken out. This is our bearish order block. It is near our resistance level and it has the most range, and it is the highest up close candle near our resistance level. When I say up close candle, I mean the bullish candle. Down close candle, it is the bearish candle. So stop loss placement above it. So let us see what the market has for us. So the market dived into it. We will be targeting these lows because it is our weak low, whereby the market 62 to trade below, so just slightly below it. So we were tagged. See what the market is doing now. So you can see the market hit the target objective, and that is it. That is how you trade your order blocks, both the bullish and the bearish order blocks. So consider watching the bullish order block video, also this bearish order block video. You can also consider the strong high, strong low video, and at least you can be framing now your setups in a quite logical and a very good way. So if it was insightful, consider subscribing, give this video a thumbs up and a like also, and also strive to share with the community. Leave the comments.